It honestly all comes down to mindset. Like we have clients that they're a family of four and they make $80,000 a year that have more money than our clients that make $5 to $10 million a year. And that just shows you like, it doesn't matter how much money you make. It's all in your mind of how much do you deserve to keep? And do I deserve to invest this money and allow it to grow? Or am I just gonna let it all go away, right?
I was programmed one way. He had a reset, a reprogram at some point. Yeah. I've been going through this awareness of like, man, I am a little cheap punk. And you know, this abundance, he's like, well, and then he brought up, he's like, hey, like, it's all about abundance. It's all about giving. And I was like, Dad, this is a new version of you. Like, I was like, what happened? Right? Like, cause I was like, this isn't how we were raised. And he's like, yeah, I've had to have some good wake up calls. And my dad's 70 years old. Like it wasn't until like recently he had that wake up call. And I was like, oh man, like I should have that now in my 30s. You know what I mean? And it's
That's
funny
awesome
when you bring awareness to just how you tip or how you taxes, like. What's up, everybody? This is Sam Taggart with another episode of the D2D podcast. And before I bring on our special guest today, I'm going to cover over a couple announcements. We had a really big success at Street Smarts with DECA. We, a bunch of kids, we had a bunch of volunteers. It was really cool to see just everybody kind of coming together, trying to help be better young entrepreneurs. So if you have high school kids that are looking to start their own businesses this summer, we're going to be doing a tournament, kind of sponsoring a bunch of high school and middle school kids, starting little door-to-door sales businesses like curbs, window washing, lawn mowing, just because we want to inspire the people to learn street smarts, not just book smarts, and that hustle muscle, because I feel like in the younger generation, we can all agree that they're getting stuck behind screens way too long and stuff like that. So we want to inspire helping the next generation of business owners learn skills and empower them. And we do that through our for-purpose business, Street Smarts. So check that out. Anyway, so our special guest today is Miss Barbara. I don't even know how to say your last name. It like kills me.
It's okay.
Just help me out with it.
Schreihans.
Schreihans. Okay. I was like, I don't want to botch it. And she is the founder of Your Tax Coach, which is a business that helps, obviously businesses and 1099 individuals save money in taxes and, optimize their strategy there. And it's been fun to get to know Barbara over the last little bit. She was a vendor at DoorCon, and jumped into our world not too long ago and has already seen some really big success with some clients. And yeah, I guess kind of tell us a little bit about you, like your background, like why this world? Why are you excited about D2D experts and DDCon and you're jumping in this world? So.
Yeah, I mean, we love all things taxes and saving people money. And especially with door-to-door knockers, I feel like they kind of jump into this business and they're like, maybe I'll make some money one day. And then the year goes by, they've made the money. And then they're like, crap, how much do I have to pay in taxes? I didn't save for it. I didn't keep track of my expenses. And so we're just here to really like help organize, help them save, and just provide value.
Love that. So what got you excited about taxes? Like where did nobody wakes up and is like, I love taxes,
right? I know, it's like so weird. People always ask that same question and I'm like, if anyone tells you they grew up and they were like, I'm gonna be a tax accountant, they're lying to you. But really, when I was in college, I went to community school for 5 years, first of all, because obviously I couldn't figure out what I wanted to do. I got 4 AA degrees, and then finally my community college was like, you cannot stay here any longer. Like, you need to go to university. So I transferred to university as a business major because that was like just a vague enough, degree that I wasn't kind of pigeonholed. And when I was there, I got pregnant. And so I went to my career counselor and I was like, I'm having a baby. I'm gonna need a job like the day that I graduate. What do I need to major in that like 100% I'm gonna have a job? outside of school, and she was like, accounting. And I was like, accounting? Like, that is so boring. But that's what I did, and had a job before I graduated, which was good, and started at the biggest accounting firm in the world, and just kind of turned my non-passion into a passion of like, oh, wow, I can actually provide value to these people and help them save money.
Let's talk about that for a second. You turned a non-passion into a passion. I don't think anybody listening to this probably is like, I'm gonna be a door knocker. It's like, I'm gonna go sell roofs as I grow up. Like, how do you shift things from a non-passion to a passion?
Yeah, I mean, for me, it was just kind of like do or die. Like, I was having a baby, I needed to provide for him. And it was like, for now, you just have to do it. And then it was just finding that silver lining once I was there and in it. It was like, okay, what parts of this do I like? And which parts of this actually make a difference? And where I can provide value. Similar with door-to-door knocking, like if you're a landscaper, you're not just a landscaper. At Door-to-Door Con, I heard someone tell a story about you're not just a landscaper, you're giving dads back time with their kids, So it's shifting that perspective of like, we're not just doing tax returns, we're not just bean counters, we're literally giving families back tens of thousands of dollars that they can use to take their kids to Disneyland,
Love that. And it's framing. It's all your relative perspective in how you're viewing. I'm not just a door knocker. It's like I'm creating this, or I'm doing that, or I love that. So let's talk about money. If you're listening to this, guys, this conversation is going to go down a rabbit hole of, obviously Barbara hears and sees and looks at people's tax returns and deals with business owners. I mean, over the years, how many businesses do you think you filed or consulted, if you had to guess?
10,000? That's a lot. I've never thought about that.
10,000 tax returns?
Yeah.
Oh my gosh. So if there's anyone that can say, I have the 10,000 hour rule, but it takes more than an hour to file taxes, and more than one meeting and so therefore that deems Barbara kind of a financial expert in her own world. And you look at this, and I would actually say 95% of America or the world probably has not deemed themselves financial experts. You know what I mean? Like, you make money, that doesn't make you a financial expert. You spend money's in a bank account, that doesn't make you a financial expert. Like, you know what I mean? Just like we transact with money on a constant basis, everybody knows what money is.
Yeah.
That doesn't make you educated around, the growth, the savings, the budgeting, the accounting side of money. And so that's why I want to dive into this whole like relationship to money. And one, what have you noticed out of these 10,000 businesses and people you've worked with? What have you seen, if you had to describe different types of relationship to money that you've seen, how would you describe those?
It honestly all comes down to mindset. Like we have clients that they're a family of 4 and they make $80,000 a year that have more money than our clients that make $5 to $10 million a year. And that just shows you, like, it doesn't matter how much money you make. It's all in your mind of how much do you deserve to keep, and do I deserve to invest this money and allow it to grow, or am I just gonna let it all go away, right? We've seen it with like lottery winners. You hear it all the time on the news. This person won $1 million, and then 6 months later, they're completely broke and they owe in taxes, and they're gonna, go to jail for not paying their taxes, all kinds of crazy stuff, because they didn't have the money mindset before they won the lottery that would allow them to keep it. So I would say, like, no matter where you are in your income or business journey, you have to work on the inside first.
Love that. So what makes a good money mindset? Like, if you had to say, here's some key principles that I abide by, or I tell my clients to abide by, what would that look like?
Man, it's so, I would say, like, personal and kind of depends on what you saw growing up, right? We're all like victims of our childhood. Not victim, that's a bad word, but a result of our childhood. And it just depends what we saw. Like for me, both my parents are addicts. And so I saw a different money mindset than maybe the person next to me. Like my parents never had money, and whatever they did scrounge from making minimum wage jobs, like they spent it on drugs, or they would somehow come into a large sum of money and then a week later it was gone because my dad would gamble it away. So we all kind of see these things. Some people might have grown up with a lot of money, but then they saw their parents be so afraid to spend it and so frugal that then they also have that like frugality mindset and don't allow themselves to invest. So we see like the whole gamut of it. And so I would say like first kind of write down what you remember hearing as a kid. Like I know for me, it was like we could never order drinks at a restaurant because that was an extra expense, right? So I realized when I was like in my 20s, I was like, man, I never order like a cocktail or even, I mean, I don't drink soda, but like I couldn't even buy a soda, you know, because that was just like ingrained in me growing up. Maybe you heard something different. So I would say like write down what you remember hearing and then being like, is that actually true? Like, am I worthy of drinks? That's probably why I always have like 5 drinks with me now, right? Because I'm like, I'm worthy of having drinks. But yeah, just figuring out what those like, what that programming was as a kid and just changing it.
So how do you, because that's where, so step one, in my opinion, is awareness. Like, are you even aware of your program? Mm-hmm. And sometimes it takes some external feedback to be like, you're cheap. Like, you're always too cheap, dude. Like, and this happened to me, I'll be honest. I was on a date and I go to tip or something. And she looks and and this is my girl, this is Mia or whatever. And I was like, she's like, are you kidding me? And she's like, why'd you only tip that? And I was like, I don't know. Like, that's just, I just wrote down a number. I didn't even think much of it. And she's like, from now on, you're going to tip over 20%. She's like, 25% is the new 15%. And I was like, no, like I had this like fight, like, and I was just like, she's like, these people are working their asses off. They paid nothing. Like, you know, and she goes into this and I just was like, so, and I watched, so this is what ended up happening. So, and I never tipped do you tip your Chipotle people or do you tip your ice cream people?
I tip ice cream people, but not Chipotle. I don't think it asks you for a tip there.
A lot of like the walk-through kind of restaurant, like, or like you're a barista at a coffee shop, do you tip that, like behind the counter? So I never grew up doing that. Like, I just was like, why would you tip them? They literally are right there. Like, they didn't like wait on me like a table, mm-hmm. right? Like, that was always my mindset. And I just grew up with the frugal dad, right? Like, and so I was at dinner with my dad, and we went through one of those kind of walkthroughs, like, I forget, some like noodle company or something. And I watched my dad. I didn't tip. And then my dad looks, he's like, well, did you not leave the tip? He's like, I got the tip. And he like pulls out his wallet, he puts the money in the thing, and I go, I've never seen you tip on one of these. And it like sparked this like feedback of like, oh my gosh, I was programmed one way. He had a reset or reprogram at some point. I've been going through this awareness of like, man, I am a little cheap punk. And, you know, this abundance, he's like, well, and then he brought up, he's like, hey, like, it's all about abundance. It's all about giving. And I was like, Dad, this is a new version of you. Like, I was like, what happened? Right? Like, cause I was like, this isn't how we were raised. And he's like, yeah, I've had to have some good wake up calls. And my dad's 70 years old. Like, it wasn't until like recently he had that wake up call. And I was like, oh man, like I should have that now in my 30s. You know what I mean? And it's That's funny awesome. when you bring awareness to just how you tip or how you taxes. Like my uncles, I had this conversation, and I'm curious your 2 cents. My uncle makes a ton of money, he's a lawyer, and my other uncle's a judge, and we're all fighting them on taxes. And guess what their response was? It was, oh, I love giving the money to the government. We were all like, what? Like genuinely was like, he's like, oh, it means a lot when I pay a lot in taxes. It just means I make tons of money. And I'm like, you don't have like this plan to not pay the government? Like this whole strategic, like, you know, move money here and invest in real estate, do the cost sake. Like you don't, he's like, no. The government needs our money.
I mean, that's definitely one way to look at it, right? I mean,
I was like, what? But his relationship to taxes was very different than my relationship to taxes.
Yeah, right? You don't see that very often, but I always tell clients, like, we want to lower your taxes as much as we can, and we will find you strategies to save. But also in the end, if you owe some money, like, it is a privilege to pay taxes. Like, that just means that you made a lot of money, like your uncle was saying. Like, so it's not a terrible thing. But what I don't like is when people overpay when they don't have to, you know?
Yes. And we're going to talk about that here in a second. It's just because when you overpay, that's a frustrating thing. You're like, did you not know that if you click this button, it would save you $15,000?
Yeah.
Like, really? That's it? Like, yep, you just missed the button. You already did it. You earned it. You didn't do anything else. You just didn't know there was a line item that you could do this thing.
Right.
And like, that kind of stuff is what bugs me. When people have a $15,000 overage because they didn't know the tax codes and the loopholes, and and I always have the mindset of like, well, the loopholes are there, people are using them, they're either using them or I'm using them, and it's using the codes and the laws that are there for you. So I guess the question would be like Donald Trump, right? Remember how he kept getting a bunch of crap for never paying taxes?
Yeah.
How did he do that? Like, what did he do to make millions of dollars and never pay taxes?
So I would say, like, and I did so many stories when this came out on the news because I was like so fascinated by Trump's tax stuff. But I would say, first of all, it's all that like clickbait stuff. He didn't actually pay nothing in taxes. He paid nothing in personal taxes, and I'll go into that in a second. But he paid millions upon millions in payroll taxes. So that just means he has employed thousands of people. And when you employ people, you have to pay payroll taxes. And there's really no way to get out of payroll taxes. So I would say, first off, he did pay taxes, just not personal income tax. So millions in payroll tax, millions and millions in sales tax as well, right?
Transaction.
Yeah, but in personal taxes, he doesn't have to pay anything, and he likely won't ever. And that's because majority of it is 1031 exchanges. So he invests a lot into real estate, right? And when you sell a piece of real estate, if you put your gain into another piece of real estate, you don't pay anything in taxes. You're basically rolling over your gain into more and more different properties. And the really cool part is when Trump dies and his stuff probably goes to his kids or his wife or whoever, when they inherit it at the new market value of what that property is. So they could turn around and sell it and literally also pay nothing in tax. So you're delaying this tax until you die. And then there's no taxes to your kids or spouse or whoever gets it. So super cool strategy, and everybody can use it, not just Trump. Like, if you have one rental property and you want to sell your one rental property, sell it, take back your initial investment from it and put the gain into something else.
Yeah, it's like and that's wealth building. And this is interesting. Man, three things went through my head. So just remind me, you got the income tax, personal sales tax, payroll tax. Like, there's all sorts of tax that we don't even like recognize. So it's like making ourselves aware of like how much we are actually paying taxes, so we can be smart about it. But two, as you do this whole wealth building, I think a lot of people do jobs, right? They're out there selling, they're out getting paychecks, but they don't ever change their mindset to I'm building wealth. Like Donald Trump is saying, I'm going to leave a legacy. My grandkids and my great grandkids are never going to have to work again if they don't. What's your 2 cents on how do you start? Where if I'm 30 years old or I'm 29, or whatever, how old I am, what's your recommendation on starting to build wealth and starting to implement some of these investment strategies so that I go from just an income paycheck to paycheck and savings account to wealth building?
There's so much. Like, if you do just have a W-2 job, I would say invest in your 401k up to your match, right? If your employer is going to match your contribution to your 401k, do that. That's free money, literally. Beyond that, I think everyone should have a self-directed IRA. And that just means you put money in a retirement account, but you have control on where it goes. So it doesn't just have to go to the stock market. You can say, I really like crypto, and put it into crypto. You can say, I really like real estate. So you can put your retirement account into real estate. So I would say, like, start contributing as early as you can to your 401k, even if it's like $50 a month. Like, you're not gonna realize that $50 a month is gone. Then your self-directed IRA. And I mean, we love real estate, we love crypto, we love, I would say those are like our top two for wealth building. You know, once you buy your first rental property, it just like spirals from there. You get like addicted. You're like, I need another one. I need another one.
Or sometimes. This morning I got a phone call. Yesterday I got a phone call and the toilet blew up and there was shit everywhere. And so then I go get it fixed yesterday and we were like, don't use the toilet. It'll then flood again. They used the toilet again this morning. So I was like, you idiots. I have to send the freaking disaster repair people back again today. And that's when you're like, well, rental property, not my jam. But I'm not, luckily I'm just getting the phone calls like, oh, that's cool. What idiots. Like, you know, but
I mean, yes, of course.
But
those situations.
I have done many rentals and, you know, it's a small price you pay for a large upside. So I would gladly think through that. Anyway, sorry, it's just funny because it happened this morning and I was like, wow, that's been a while since I've had one of these.
And now you're like, F real estate.
So I think something you said is important. $50 a month. You know, a lot of us get in the mindset of, if I don't have 100 grand in the bank, or if I don't have 50 grand to go invest, I don't want to invest. Like, I have to have a certain dollar amount to start making in order to invest, which I think is a complete falsity. And I think I have to like drink that Kool-Aid even. Like, you're right. Like, what if you just set up an auto withdrawal that just went somewhere?
Yeah.
Even if it's 200, 550, you know, 2,000, whatever your number is, it's going to start forcing you. So Robinhood, here's one of my strategies is I do certain dollar amount every 2 weeks will go into my Robinhood account.
Yeah. It's
just an auto deposit. And then I'm like, oh shoot, there's money in there. I should probably invest it in something and I'll buy Tesla or I'll buy who knows what stock. And that was, and I did that. And before I knew it, I had 6 figures in my Robinhood and I was like, oh, there's 6 figures there. Like, you know what I mean? There's money there. And it didn't hurt. It wasn't like I was living less of a life. It wasn't like it was just consistent.
Totally. I have a similar story. Like, when I graduated my master's program, I was in like literally multiple 6 figures of debt between credit card debt. I had to put daycare on my credit card for a year because I had that baby in college and I did my master's program. And then, dude, daycare on a credit card, terrible idea. But anyways, I was still trying to get out of debt, but I opened an Acorns account, very similar to Robinhood, but they put it into like funds instead of individual stocks. And
really?
I started with...
Yeah, I'm switching because I don't like the stocks game.
Oh yeah, Acorns is really cool. I have both, but I do like Acorns a lot. And I literally started with $5 a week. It was their minimum investment. You can do $5 a week. And I kept upping it. And then when I started my business and building wealth, I could obviously like up it a lot. And I just looked the other day and same thing. It was like, oh my gosh, like this thing just grew without me even thinking about it. And because it was on autopilot, like you just don't miss it. You really don't. So yeah, try to get things on autopilot.
Love that. So let's talk about just some of your 2 cents for, I make 100 grand this year. I'm out selling, finally came into some money. What are some tax tips you tell your clients? Like, what are some things they need to be looking for?
Yeah, I would say if you know or you have made $40,000 at least in 1099 income, make sure you have your LLC, because not just for protection and all of that lawyery stuff, but once you have your LLC, you can then switch to an S Corp. And an S Corp just on 40,000 of income will save you $6,000 in taxes. If you made 100 grand, like your example, you'll save $15,000 in taxes if you elect to be an S Corp. So that's like the
button I was just talking about.
Yeah.
15 grand.
I knew you, I was following your logic there.
Yeah.
But yeah, you have to have an LLC first. So just have it in your back pocket. So that way, when you're ready to switch to an S Corp, you can do that. That's like number one. Because when people owe on their tax returns, it's usually from self-employment tax. And that's where the S Corp will come in handy. So S Corp, I would say keep track of all of your deductions, right? If you're driving around, you should be writing off your vehicle. You can write off gas, repairs, if you get your car detailed.
What tools do you use to keep track? Like, do you have any specific tools that you're like, I like this app, that thing, to keep track of expenses and that deductions?
Yeah, QuickBooks Online is great. You just link your credit card and your bank account to it. Make sure you have a business bank account, business credit card, link it up to there. It puts every transaction in there. So you just have to go in and tell it what it is. So this is a car expense. This is a meals expense, blah, blah, blah. But QuickBooks Online is great because then at the end of the year, it'll show total income, 100,000, and then all of your deductions.
Here's what's interesting too. I wish I would have done that sooner. I put my head in the sand when it comes, like I was always invest and make more money. Those are my strategies.
Yeah.
It wasn't track and understand what that money is and where it is and where it's going. You know what I mean? It wasn't like the reporting and the feedback and the levers that tell me what's going on. And so what ended up happening was I went a year, 2, then 3 years into business, living the same motto that I lived as a sales rep. You know what I mean?
Yeah.
And had I done this whole, like when you get into business, QuickBooks is like kind of a staple. Like you're going to get QuickBooks, you're going to have accounting, you're going to have that kind of stuff. So if I'm a sales rep right now, and the advice I would give you, or a manager, an owner, you never know. Like you think you'll live or die, but maybe one day you end up starting your own business. So like you might be drinking the Kool-Aid where you're at today, and tomorrow you're running your own business. So it's like, if you treated yourself like a true 1099 as a sales rep or a manager that you're working there, why not set up your own QuickBooks account and actually start looking at profit and losses, deductions, expense reports, balance sheets, and starting to actually educate yourself by using the apps that you need to today, so that if you ever did run a business, it's such an easier transition. Because it took me 3 years to kind of wake up and be like, oh crap. And it wasn't until I got audited through the divorce that it was like, hey, I need to actually look at what your business is worth. And I had a business evaluation done. And I was like, oh, that's going to be fun. You know what I mean? Like, and it ended up, now today I can kind of confidently say like, okay, I know where the things are at, but it wasn't for a few years though. I mean, anyway, so that's my 2 cents on that. So keep going. So other things that what deductions could they keep track of that are important?
Yeah, all their vehicle ones. Take a home office deduction if you do any sort of work in your home office. So are you following up with clients? Are you making sales calls? Any of that? Take your home office deductions. There is a way that you can pay your kids. If any of these door-to-door knockers have children, you can add your kids to Payroll, which is really cool.
You just set it up like, I use like Every, and it's just a payroll software. So I just add them to my Every and just pay into them and then.
So you definitely need documentation for it. So if you're paying kids under 14, you have to have a different consent form that has to be signed. And you do want to keep track of like, what are they actually doing in the business? But for example, for really young kids, you can call them models in your business. If you post about them like on social media or your website, you're just paying them for use of their photos. So then you would need a modeling contract, employment contract, all of that. So yes, you can, you just add them to Payroll, but keep the documentation in case, like you said, you're audited. But you can pay them up to $12,950 each per year. So it's a big business deduction in your business. It's tax-free to the kids. There's anytime you go out to eat, you can probably relate that somehow to business. So are you talking to a client, to a prospective client? Could they ever be a client? Could this person refer someone to you? Like really anytime you go out to eat could be a business expense. There is the Augusta rule. That's a really cool deduction where your business can pay yourself rent and it creates a big rent expense on your business and it's tax-free to you personally. So that's a really cool one. Again, you want to document it. Like, why are you renting to yourself? have a lease agreement, have invoices, all of that, but you can get out like tens of thousands of dollars from your business.
Oh, so even if I signed a lease, so I'm paying rent on an office space.
Mm-hmm.
Sam Taggart signed the lease, so then I'm double dipping. Like, is it coming out twice essentially? Because rent, D2D experts would pay Sam Taggart $2,000 a month. Sam Taggart would then pay the landlord $2,000 a month. Like, how does that work?
No, so different than an office space, your business is going to pay you personally for use of your personal house in your business. So,
okay. So like, office, yeah, home office. Rent.
No, different. So you have home office deductions. That's cool. That's fine. People usually get like $5,000 of deductions doing it that way. The Augusta rule, you can say, I need to have a board meeting, because you have to have board meetings if you're an S Corp. If I went to the W Hotel, how much would it cost to have a board meeting there? Typically, it's at least $1,500. Plus, you have to have their minimum catering fee, another $1,500, plus $600 a night to stay there. Plus, how am I going to get there? So transportation to and from, say the total's $5,000 each time you need a board meeting. Well, you can say, I'm going to have that board meeting at my house and charge my business $5,000 each time. You can do that up to 14 times a year. So whatever that is, $80,000 out of your business. It's awesome. Yeah.
Oh, can I just set that up on auto pay?
Yeah. Yep. Just make sure you have the lease agreement. So why is your business renting to you personally? When you transfer the money from your business to personal, make sure it's called rent expense. And then write down what your board meeting was for. So are you planning out the next quarter? Is it to plan out your next hires? Is it to plan out the next D2D con? Have a business meeting like reason.
Love that.
Yeah.
Once a month, you could have your own little like retreat with your key executives.
Yep. It's awesome.
I'm doing that today. I actually have a meeting. I have a board meeting today. Why don't we say we're going to do it at my house?
Yeah.
Done.
There you go.
I just saved. I mean, think about that, guys. If you're listening to this and you charge $80,000 a year to your business, and I'm in a 40% tax bracket, I just saved $30,000-$40,000 I was going to give the government by just setting up. God, like, I don't think you just got this. Like, what she just taught you, if you go implement, is a $40,000 for 15 minutes of your time setting up the documentation, setting up the auto transfer from one account to another account, and you just saved $30,000. Like, yeah. Thank you. I just wrote it down. Done.
Yeah. It's pretty cool. We have literally hundreds of these loopholes. They're awesome.
I love this. So if someone wants to reach out to you and hear about these loopholes, because it's like, for me, somebody's like, oh, I do my own taxes. I'm like, you're an idiot, because you just didn't know about the Augusta rule, you dummy.
Yeah.
So I would rather pay somebody $5,000, $2,000, $1,000, whatever you charge, to save $40,000 in 15 minutes, like you just did. I'll send me an invoice, because that was the best advice. No, so how do they reach out to you? How do they find more?
Yeah, so Your Tax Coach on Instagram, we're there all day, like drop in tax tips and tricks. So just send us a DM, or you can email me, barbara@yourtaxcoach.biz, B-I-Z. And yeah, we have tax prep. We do tax strategy services. We have a course. It's so awesome. It's called Write Off Your Life. It will teach you literally how to write off your entire life in your business and save you tens of thousands in taxes. So reach out to us there.
Is that on the website?
The course. So we open and close the course. It's closed right now, but you can get on the wait list. And I think we're relaunching it at the end of March.
Cool. And the website again was what?
Yourtaxcoach.biz.
Well, that's cool. Guys, go check her out. Go follow them. She's got an awesome badass boss bitch team. Like, they're freaking fire. And I got to meet all of her team. And they came, like I said, you guys came to DoorCon. We had a different conference together. You guys hosted a cool Super Bowl thing, and I hope that went well. Like, doing some cool stuff. So proud of you guys. And thank you so much for the nuggets and fire you brought onto this. This was great. And we'll hope to see you at another event here soon.
Thank you.
Okay. See ya.